Hey everyone, Brian Lebo here with your Las Vegas market update video for July. Now, this month we saw some pretty interesting trends and developments. It's still very much a buyer's market. However, I'm starting to see some signs of a ceiling beginning to form here. If you've been watching for a while, you know that I like to start off the show with a look at the current inventory. This gives us an idea of how the market is actually performing. So, as we always do, let's take a look at our monthly inventory levels. As you can see now, we entered June with only 3,501 homes on the market. By the end of the month, we were up to 3,894 homes. More realistically, as of today's shooting, there's actually 4,011 homes available. Remember, back in April, we dipped below 3,000 homes for a brief second. So in less than 3 months, the inventory has gone up 33%. That's great news for the market, but bad news for sellers. If you put this into perspective, we still only have about 40% of the inventory we need to create a fair and balanced market. Now, next, let's break down this inventory and see what it actually consists of. As you can see now, only 9% of the inventory consists of short sales, while a mere 7% of the market are foreclosures. That leaves a whopping 84% of the market as traditional or say normal sales. The only movement from last month was the short sales fell again from 10% down to 9%. But here's the real truth. The inventory is rising because more and more sellers are simply listing their homes for completely absurd prices. Whereas homes were selling at almost any price 2 months ago, I'm starting to see these homes start to simply stack up. In one zip code in Summerlin alone, the available inventory literally doubled this month. After this summer, I really think that sellers are going to have to get serious about their pricing. I think you're about to see an attitude change coming from potential buyers here. Okay, let's check in on the notice of defaults, or NODs as we refer to them. The reason we watch NODs is because this provides foreshadowing into the future of the foreclosure inventory. You see, the more NODs filed, the more foreclosures are in the pipeline. So let's take a deep breath and look now. As you can see, for relatively the entire year, the NODs have been around 1,500. And then there was last month. Here's a little segment I'm going to call What the Hell Just Happened. Yeah. So basically, last month was a nightmare. We went from 1,444 homes in May to only 99 homes in June. Here's why. Remember the bill SB 321, also known as the Homeowner Bill of Rights, that just passed last month? Well, this is the immediate result of that bill. To learn more, watch the video I made a few months ago that goes into more detail. But for now, simply understand that SB 321 dictates very specific guidelines that banks must follow when filing foreclosure proceedings. So last month, and most likely this month, will both be lost on the banks simply determining and training their staff on these compliance issues. Then, by definition of this law, it pushes any foreclosure action out by about another 30 days. So basically, I'm not expecting much for either July. Frankly, I think it will be at least September until we get anywhere near 1,500 again. On the other hand, now that AB 284 was amended by the passing of AB 300, I'm thinking that it's possible we may see the NODs surpass 2,000 a month sometime next year. The big news this month was over interest rates. Basically, during the last week in June, interest rates jumped up an entire half a point. This is in just 1 week's time. That's the highest interest rates have jumped since 1987. We all knew that this was coming, but no one expected a slap shot to the face. Now, if rates continue to increase, this could actually have a very negative effect on our housing market, especially on the low end. Look at it this way. A buyer who last month was looking at a $300,000 home at an interest rate around 3.5% can now only afford about $250,000 for the same payment if rates creep up towards the 5% mark. Remember, also in June, FHA mortgage insurance went through the roof. So just in 1 month, payments are much higher, and what buyers will be able to qualify for just went down as well. This is a losing situation for everyone. Remember, the government was trying to keep the rates down to encourage home building and buying. Now that the government believes that the economy is strong and the housing market has rebounded, they are essentially trying to slowly back away. So let's quickly wrap up. Inventory is steadily rising, but it's filled with a bunch of overpriced homes that are starting to pile up. Foreclosure activity pretty much came to a grinding halt, and interest rates are heading in a very undesirable direction. So what does all of this mean? Okay, here's how I see it. Like I've said for a while now, I think prices will plateau out this summer. Even though interest rates are ridiculously low, people have short memories, and all they see is that prices have shot through the roof and interest rates just jumped. This means investors are starting to walk away from Vegas. What used to be cheap money and cheap housing has now subsided. We're going to start finally seeing families start buying homes instead of these hedge funds and private investors. Now, although this is healthy and welcomed, this also means that without all of this cash just being thrown around, buyers and sellers will be bound by the fate of appraisals. With the inventory rising at its current pace, we should be up to about 6,000 homes come Halloween. Now, this is twice what we had just 2 months ago. Now, that is finally a game changer. Once the general media catches on to the rising inventory, I think you'll start to see buyers become a little bit more confident and a little bit more patient. Sellers who actually want or need to sell will cash out before they feel the good days are behind them. Now, last but not least, you can't forget about the 80,000 or so homes that are delinquent and eventually will have to be foreclosed on. Sooner or later, we have to deal with that elephant in the room. I mean, I still say, if you're a buyer, go ahead and give it a shot. It's getting marginally easier, and I don't see prices retreating anytime soon. But if you're a seller, and especially if you have a home that's not necessarily the nicest home on the block, I think your time is quickly dwindling away. Buyers are paying top dollar for garbage right now. The nicest house on the block will always sell quickly, and it will always sell for top dollar. But for the other 99% of homeowners out there, sell now while you can dictate your terms and price. Now, thank you again for watching. And please feel free to contact me directly with any questions or concerns you have about Las Vegas real estate.